Hey guys, how's everyone doing? This is Nick from forexnoobs.com with the monthly webinar. Today we are going to be discussing how to find powerful support and resistance. So, I just want to do a quick audio check. Can all of you guys hear me? Alright, it looks like the audio is working, so let's get going, guys. We don't have much time today. We have technically an hour, but I'd like to finish up before the hour if possible. But, we do have an hour. We're going to be leaving questions until the end, please. So let's get started. What are we going to learn today? Today I'm going to teach you guys how to find powerful support resistance areas. Support and resistance is vital in pretty much any trading strategy. Support and resistance areas are barriers which cause price to turn around. So knowing where they are is vital. It doesn't matter what strategy you're trading. You need to have support resistance on your chart. I'll show you why in a little bit. You're going to learn how to remove weak support resistance areas, basically get rid of weak support resistance areas. One of the major problems with placing support resistance areas on your chart is that you might end up placing too many of them. And your chart might just get full of support resistance areas and then you don't know where to take trades. Well, there is a way to identify the weak ones and just get rid of them and have only the strong ones. And I'm going to show you how to do that. I'm going to show you how to use support resistance areas to avoid risky trades, which is very important. I'm going to show you how to use support resistance areas to set smart targets, which is very important. And this is all going to tie in with last month's webinar, or actually it was technically this month. It was, I think, on the 1st or something of March. We did a webinar on setting smart targets and stops. This is going to tie in nicely with that webinar. And I'm sure as we go through, we're going to learn a whole lot more. So, let's get started, guys. Before we actually get into the content, just a little bit about me for those of you who don't know who I am. My name's Nick Bencino. I've been trading Forex for 17 years. I'm a pure price action trader, which means I use no indicators. Around about 12 years ago, I opened forexnoobs.com. It was the first price action site online. It's pretty much one of the oldest Forex education websites online. There's a few that are older than me, like Forex Factory and Baby Pips, but it's one of the oldest Forex education sites online and definitely the oldest pure Forex price action website online. So yeah, let's get into it. Also, rules. Rules are important. Just going to lay out a few very, very simple rules, guys. Number one, don't be rude or disruptive. Look, if you have any issues with something I say, like you disagree with something I say, feel free to bring it up at the end when we do the Q&A. I'm happy to answer that. I don't mind if you disagree, but there's a difference between disagreeing and putting forward your argument nicely and just being rude. Big difference. Being rude and disruptive is not tolerated, and the moderator will ban you, basically cut you off from the webinar. Please keep your questions until the end, guys. I just want to get through the content and then do questions, because if I stop for questions throughout the webinar, then things are just going to get like messed up and all over the place. I used to do it that way and it never really went well. It basically led to 2-hour-long webinars where I was constantly stopping and getting sidetracked by questions. And number 3, do not spam. By spam, I mean do not spam in questions. If you see that I'm not answering your questions, probably just because I haven't got to you yet. Don't just keep spamming your question in, and also don't spam, Forex products and stuff like that, because you're just going to get banned straight away. Right, so let's get started with the actual webinar. So placing support resistance areas on your chart is vital. Without them, you're basically trading blind. Like I said, it doesn't matter what strategy you're trading. If you don't know where the major barriers on your chart are, you're going to be in trouble. Trading without support resistance on your chart is kind of like driving with your eyes closed. Eventually, you're going to hit a wall and it's going to hurt. Because support resistance areas, they're essentially like walls or barriers. Here's an example. Take a look at this New Zealand USD chart. This is a very recent chart, New Zealand USD from last week. Now, if you look here, it looks like price is trending up here. Price has broken through these recent highs here. See how these are the recent highs? See how it's broken through it? Broke through it there, broke through it again, and now is breaking through it for a third time. Looks like it's going up. Now, a lot of traders would enter in a long position here. They would jump in long right here and ride that trend up. But what happens if you do that in this case? Well, in this case, price pushes up to here and then turns around really, really fast. Why? Because there's resistance here. Now, if you don't have resistance on your chart, you might miss this. But if you have resistance on your chart, you know that when price hits this area here, it's very, very likely going to stall and reverse. When there is major resistance in the way or major support, you need to trade with care. You can't just buy into a resistance area or sell into a support area. But support and resistance doesn't only stop you from taking bad trades, it also allows you to take awesome trades. So what I'm going to do is I'm going to switch over to a live chart, or a real chart is what I mean. And I'm going to show you guys some trade examples using support resistance areas. Now, these are all real trades that I shared before they triggered in my daily analysis posted to YouTube. So most of these examples I shared on either Tuesday the 26th or Thursday the 21st of March, so they're very recent. You can verify this by checking my analysis recordings. I'm not just making these trades up in hindsight like most YouTube Forex educators do. You know, they'll say, oh, well, this is a perfect example of a trade, but they never actually shared the trade. These are real trades I have shared in my analysis. Maybe one of them was not shared in my public analysis. It was shared in my members only private analysis. But I think most of the other ones were shared publicly on Tuesday the 26th, like I said, or Thursday the 21st. So I'm going to be showing you some real trade examples and show you how we use support resistance to spot and enter those trades. We're going to kick things off with New Zealand USD. The example we were just talking about, that was actually a trade setup, which we've been looking at for quite some time. I think we started looking at this one actually, when was it? It was probably, yeah, it was around the 20th of March. So this one was originally, we were looking for it around Wednesday, the 20th of March, but it didn't really start to trigger properly until Tuesday, the 26th. So this is a pretty simple setup. I'm not going to go into details with how this setup was traded and the price action behind it, because I've done that in other webinars. What I want to focus on here is the support resistance and show you how we use support resistance here to see this short trade. Basically, what happens here is price pushes up quite slowly. This is a daily chart, remember, pushes up to resistance. Once it hits resistance, what happens? It stalls out at resistance. Now, you will note, if you take a look at this, that the stalling started very early on. Like I said, it started on around about the 20th of March. That's when it first started stalling at this area, but it didn't quite turn around right away. It took a little while of stalling on this area before, boom, it turned around. Now, this was helped along by some news, but that doesn't really matter. It doesn't matter if it was helped along by news. Point is that this was a setup. Now, this setup, it wasn't the first time we saw it. We have seen similar setups from this resistance area for quite some time. You could look back as far as the 4th of December 2018, and price has been bouncing away from this resistance area since then. So this is the resistance area here. What's happening in, what's the exact date there? The 4th of December 2018. What's happening on the 4th of December? Price stalls, turns around. Then we go to 1st of February 2019, price pushes up to here, stalls, turns around. Then we go to 26th of Feb 2019, price pushes up to this resistance area, turns around. Now, these are the areas I'm going to show you how to place. And down below, we have a support area that's working out just as well. So we have price bouncing from here on support. We have another trade from there. And what's possibly going to happen this week? Price is possibly going to drop down to this support area and bounce away from it. So these are the support resistance areas I'm going to show you how to place. And this is what they do for you in action. When price hits these support resistance areas, price is very likely to turn around and you have a good opportunity to enter a trade. And there's a lot of examples of this, a lot of recent examples. You can take a look at USDJPY on the 8 hour. This is another trade I shared in my analysis. And this one was taken from the support area, which, as you can see, as far back as 24th of January 2019, it's been bouncing from the support area. Price drops down to it, bounces away. Price drops down to it again. This was around February 7 or something like that. Bounces away. Price drops to it again around about March 10th, bounces away. And last week, price drops down to it, bounces away. So we can see this support area in action. And there's countless examples, countless very recent examples. GBP New Zealand is another one. GBP New Zealand, we could see from this resistance area, there's been bounces on the 28th of Feb, 13th of March, and more recently on the 27th of March. This was one of the ones I shared in the analysis. Price shot down from there. Anyway, look, I could show you a bunch of examples, but that's not what we're here to do. What I want to show you now is how to place these support resistance areas. That way you can catch those kinds of trades because you need them on your chart. And like I said, even if you're not trading my strategy specifically, having these support resistance areas on your chart is going to allow you to avoid major trading mistakes. The example I gave you with New Zealand USD, you do not want to go long here. If you go long here, you're going long into resistance and price is very likely going to turn around. You want to go long after it breaks through resistance. So let's place some support resistance areas. Actually, yeah, we have this slide here. So how to place support resistance areas. Placing support resistance areas is, well, it used to be quite difficult, but I kind of boiled it down into a nice and simple formula, which I'm going to show you. I'm going to take you through a bunch of charts and show you how to place support resistance. So step 1, open a daily chart and zoom out until you see around 3 to 4 months worth of candles. Step 2, place an area at the topmost and bottommost of the extreme bounces. I'll show you how to do that in a second. Step 3, add areas between the top and bottommost by connecting the dots. Again, I'm going to show you how to do that in a second. And by second, I mean right now. So we're going to switch to a chart layout where I've already removed all the support resistance areas. That way we can kind of start fresh and place them anew. We're going to start things off with New Zealand USD. So the first thing you do, like I said, is you zoom out and you place the topmost and the bottommost. You zoom out till you have around about 3 to 4 months worth of candles on your screen. It doesn't have to be a perfect 3 to 4 months. I mean, it really doesn't. I zoom out to about like this. This is June 2018. So this is a fair bit more than a few months. You could go something like that. It doesn't really matter. When I say 3 to 4 months, it's just a kind of a general idea of where you want to be at. But I've zoomed out. This starts around about September. So this is more like 6 months worth of data. So let's start by placing the topmost and the bottommost. Step 1. Now, generally speaking, with support resistance, what I want to see is I want to see at least two bounces connecting in order to place my support resistance areas. So I need to see two bounces connecting. So that would be an area there because it's got two bounces. But for the topmost and the bottommost, I'm willing to place it based on just one bounce because those are the extreme bounces. Those are the most important ones, the biggest ones. And those are the ones that do not necessarily require two bounces to place. So I'll show you what I mean right now by placing this one here. So I'm going to place a support area down here on this bounce. Now I place support resistance areas at the bodies of candles, not the wicks, so you could see the center line lines up with the bodies. The thickness of the support resistance area does not matter. In fact, many traders using my strategy do not use shaded areas at all. They just use solid lines like that. Now you could use solid lines, you could use shaded areas. I simply use shaded areas because I like them better. They look a bit nicer to me visually. When I look at the shaded area, it just makes it easier for me to read the price action on my chart. But the width of this area does not matter. Obviously you don't want it too big because that's crazy. I have it usually around about 20 pips apart, but it really does not matter and it does not mean anything. Like I said, you could use a solid line if you want. You don't need the shaded areas. So I'm placing one here at the bottommost bounce that I see in the last 3 to 6 months. So this is the bottommost bounce. Now, I don't need two bounces here in order to place this one because this one is such an extreme bounce. Price came all the way down to here and then reversed this much. That's a huge, huge bounce. So I don't need two bounces in order to place this area. We're going to place a top one. Now, the top one, what I would first do would be place it here at this body here because this is an extreme bounce, right? But one thing with support resistance areas is recent data is always more important. So when I say recent data, what I mean is recent bounces. So the first thing I see that stands out to me is this bounce here. I place it at the body of that bounce. But then when I look to the right a little bit, I see that these recent bounces have been a little bit lower. See, the bodies have been a little bit lower. So I just pull it down just a little bit. Doesn't really matter that much, but I'm pulling it down just a little bit to be more in line with those recent bounces because recent data is more important. So now I have the topmost, which is here, and the bottommost. All I got to do from here is fill in the areas in between. So I need to place some support resistance areas between the topmost and the bottommost. Pretty simple. And how I do this is I like to connect the dots, essentially. So what are dots? We have a bounce here, we have a bounce here, we have a bounce there. So if you imagine at the bottom of these bounces, there's, I don't even know if I can draw dots with these tools. I think I can. Oh no, that's like a, oh whatever, that'll work. So let's imagine that these are dots. We have 3 dots down here. What we're going to do is we're simply going to connect them with a line, draw a line across. Now, this is pretty simple. Kids can do this, can't they? Oops, let's remove that one. Kids can do this, can't they? Like, remember when you were a kid, there used to be those drawing books that had a bunch of dots and you had to connect them in order. And when you connect them in order, you end up drawing a picture. This is even simpler than that because you don't need to connect them in order and they're dots that just kind of line up in a straight line. All we're doing is connecting the dots. One bounce there, one bounce here, and one bounce here. Now we're going to pull this one up a little bit to adjust with the most recent bounce, which recent data is the most important, as I just said. And here we have a support area. Now we're going to be using this support area this week because I think there's a good chance if New Zealand USD drops down to this support area this week, as I've already said, it's going to bounce away because price right now is in a range between this resistance here and this support area here. So we've placed our first area between the bottommost and the topmost. We've got to place at least one more because there's a huge gap and it looks like there is some support resistance down here. So let's take a quick look and see if one actually fits down here. You don't have to place a support resistance area down here. If there is no clearly defined bounces where you can connect the dots, then you do not place support resistance areas. One of the key rules of support resistance is you never place support resistance areas just to place them. That's one of the ways to avoid placing weak ones. You place them when there is clear bounces in order for you to basically connect the dots. So what I'm seeing is here, there's a pretty strong wick bounce. See how this wick bounced from here? But then if you look to the left, there's another body bounce there. So we're connecting those two dots. That's pretty recent data. And that kind of makes sense. And if you look further to the left, you could see that in the past it had bounced here also. Yeah, when was that? That was 16th of August, 2018. And if we really want to, we can also place one here because we can see that price has bounced from here twice. And those are two relatively strong bounces. So I think that's it for New Zealand USD. Another thing you can do at this point, because right now price is here, and below where price is, we have 4 support resistance areas extending all the way down to here. But above price, we only have one area. So if during the week, price ends up pushing up, breaking this resistance area this time, we're not going to have any resistance areas above. So when you notice something like this, it's usually worthwhile to just go back, find some recent bounces. Yeah, see how these ones all connect? Starting here, it connects to those bounces there. So I'm going to place this one here. That way we at least have a resistance area up above. If price breaks through this resistance area this week, I don't need to look for a new one because it's already there. So that's it. We've placed support resistance areas on New Zealand USD. Pretty straightforward, pretty simple. Now, let's place support resistance areas on USDJPY. Just going to quickly check the chat, make sure that audio is still good. All right, cool. It's all good. I just sometimes get a little paranoid that my mic's cut out because it has happened before. So I thought I'd check the chat to make sure no one was saying, I can't hear you. Right, so let's do some USDJPY support resistance. Again, what I'm going to do is I'm going to zoom out and I'm going to place the topmost and the bottommost. So zoom out till I have about 3-ish, 4-ish months worth of data on my chart. When I say worth of data, what I mean is basically worth of candles. So this is about 3, 4, 5 months worth of candles. I'm going to place the topmost and the bottommost. So the bottommost is a pretty extreme bounce from here, from this wick bounce. This happened in early January when we had some crazy movement on the yen. But that's led to a very, very strong bounce. And this is a strong support area. I'm going to place the topmost, which I probably would place there when I initially look. But because that's so close to these more recent bounces, I'm going to adjust that down to here to be in line with those recent bounces. So now we have the topmost, we have the bottommost. We're going to fill in the area in between. First one, I think I'll place there, but I just want to confirm that. Yeah, okay. So I'm placing it here based on this body bounce. So this one's a bit of a weird one where you have this very strong wick, but you also have the bodies stalling out here. Both of these are significant points for placing support resistance. The wick is significant, but the body is also significant. It's very rare that you get a candle with such a long wick where both of them are significant. But in this case, both the body and the wick are significant. Now, I don't want to place this based on just a single bounce, but when I look back, I do see other bounces here. For one, I see this bounce there, and we can see that price moves sideways before breaking through this area here. So it doesn't quite bounce from it, but you can see it struggles at it. That's a sign of resistance. You look back, you see a pretty significant bounce here. So, oops. So I'm going to place that one. One that really stands out is that there. Now that one's pretty obvious. If you look, you'll see that price is bouncing from here and from there. Actually kind of has a double sort of bounce there and a more recent bounce here. So that one's quite obvious. Doesn't have much history to it, but it looks like a newer support resistance area, but that is fine. And place one here. So if I place one here, you can see it has a very recent bounce, has a bounce here, and it has a bounce there. So again, what we're doing is we're connecting the dots. Pretty simple, pretty straightforward. We've just connected this dot, we've connected that dot, and we connected that dot into a line, and this line acts as support resistance. Connected this dot with this dot and that into a line which makes support resistance. This dot, that dot into a line which makes support resistance. It's all straightforward. It's really, really simple. And when you place these areas on your chart, like I said, you get awesome trades like this one here, this New Zealand USD short. Now, this area was placed before this short trade was taken. Like I said, I shared this short trade in my analysis. So this area, even if we didn't have this bounce here, we already had 2 free bounces from around this area. So this resistance area was already placed. It was easy to see this trade coming. This trade was very, very easy to see coming. Do GBPUSD. Yeah, let's do GBPUSD. GBPUSD is a bit messy at the moment because of Brexit. But I want to play some support resistance on a messier pair to show you guys how it's done on messy pairs, because it's easy to place it on pairs like New Zealand USD, which at the moment are ranging very well. When I say ranging very well, it's what New Zealand USD is doing is it's kind of bouncing between these two areas very, very consistently. So it's very easy to place support resistance areas in a case like this. When price is just bouncing between 2 support resistance areas, it's not that hard. GBPUSD is a little bit trickier at the moment. Because of Brexit, it's having these wild swings all over the place. So it's hard to get good support resistance areas on GBPUSD. But we're going to do it so you kind of get an idea of how to place support resistance when things are a bit messy. And there's also a few things we can learn from placing support resistance areas on GBPUSD. So we're going to follow our simple rule set. Zoom out till you have about 3 to 4 months worth of data, which is roughly like this. I'm going to place the bottommost and the topmost. Again, with this wild swing down here that we had on the 3rd of Jan, the topmost and the bottommost are a little bit trickier to define. What I'm going to do is I'm going to place one there and place one here. I'm going to place double support resistance areas at the bottom because we have this major bounce here, but we also have this wick bounce here, which is pretty extreme. So I'm going to place 2 at the bottom. See, we're already kind of bending the rules a bit because the rule is to zoom out, place the bottommost and the topmost. But here we kind of have 2 bottommost ones. So I'm going to place the topmost there. The topmost is pretty straightforward and easy to place. It's got 2 bounces, very recent, very strong. Now, if you look a bit further to the left, this topmost might have been over here, but it's been adjusted up recently. Support resistance areas do kind of move a little bit with time. So originally this one would have been here, but these recent bounces that pushed above it a bit would have meant that we've moved our resistance area up a little bit. So we got our bottommost, double bottommost, and we got our topmost. Now let's fill in the gaps in between, which is pretty straightforward to do. What I'm going to do is I'm going to place one here. This kind of connects this bounce. This isn't quite a bounce, but price is stalling out here, but also connects that bounce. Now, things are a little messy, like I said, with GBPUSD. So we're going to have a lot of support resistance areas here on GBPUSD, and it's going to make it very tricky to trade this pair at the moment. But that's fine, because the fact is there is a lot of support resistance, and GBPUSD is very messy at the moment. So it's a difficult pair to take a clean trade in. I'm going to place one here which connects, actually, yeah, see, this looks like a bounce, but there's no other bounces from this area. If you look to the left, there's nothing really connecting it, so I'm not going to place one here. But if you look to the left, these are connecting, so I'm going to place these ones here. And yeah, I think that kind of wraps it up for GBPUSD. As you can see, it's kind of a bit messy, and taking a trade here, especially in this area, would be quite difficult because you have two support resistance areas very close together. So it'd be hard to take a trade, but that's fine. That doesn't mean that we should just blindly remove this area and pretend it's not there. That way we can take trades. What that means is price is kind of messy, and the chart is messy right now on GBPUSD, and understandably so with Brexit going on. So it's best to just not trade it, especially in this area here where support resistance is tightly packed together. I'm going to take a look at EURUSD. I'm just taking a quick look at the chart. All right, cool. EURUSD is another example of an extremely messy pair at the moment. And again, EURUSD is messy because of Brexit. Brexit is affecting the euro just as it's affecting USD. And the euro is becoming very, very difficult to trade at the moment. Which is why a lot of the trades I've been sharing recently have been on the cross pairs, like GBP New Zealand and all those kinds of pairs, because we're getting more clean and consistent setups on those pairs than we are on the majors like EURUSD. But you know, things just move in cycles. Sometimes we'll get more trades on the majors. Sometimes we'll get more trades on the crosses. Now I'm placing the topmost and the bottommost here on EURUSD. The topmost is there based on that major bounce. The bottommost I'm placing here based on this bounce where price is stalling out very recently. And this bounce is a bit lower, just a little bit lower. But we can see that price is stalling out here recently. So I'm just going to place it here. It doesn't really matter if it's a bit lower. If it's here, it's not a big deal. Support resistance doesn't need to be perfectly placed. A lot of people think it needs to be perfectly placed, but it's just a waste of time trying to place it perfectly. You could stress yourself out like crazy trying to get the perfect support resistance area placement going 10 pips up, 10 pips down until it's perfect. But in reality, it's not really going to help your trading that much if it's 10 pips up, 10 pips down. And it's just going to take ages for you to actually get a support resistance done on your chart. You saw how quickly I did support resistance on New Zealand USD, USDJPY, and GBPUSD. And I'm talking you through it as I'm doing it, and I'm doing it quite quickly. When I'm doing it without talking through it, I can get this done in 30 seconds flat. Now, if I'm there adjusting the support resistance area to get it perfect and trying to figure out if it makes more sense to have it down here instead of up here, which is like a very, very small difference. If I spend a lot of time doing that, it's going to take me 5-10 minutes to place support resistance areas on each chart. And if you're trading a lot of pairs like this and trying to place support resistance areas on all these charts, and you're spending 10 minutes per pair, you get the idea. It's going to become a huge, huge mess. So don't worry about getting them perfect. It's not that important. Anyway, I have my topmost, I have my bottommost. Now we're going to fill in the areas in between. To fill in the areas in between, we're just going to connect the dots. Now things, like I said, are quite messy on EURUSD right now. So it's a bit more difficult to connect the dots than it would normally be. In fact, EURUSD is a lot messier than GBPUSD. So this is quite a good example to show you guys. We can see that there are a lot of bounces from here. Now, one little trick that you can use to clear things up when stuff is extra messy is to change the time frames. Now, sometimes dropping down to the 12-hour is going to clear things up a little bit, because the 12-hour, what you're essentially doing is you're splitting each daily candle into two. So that gives you a little bit more data, and it allows you to more clearly see where support resistance is. So sometimes dropping down to the 12-hour clears things up. And sometimes going up a time frame condenses things and makes it easier to see. So I'm going to go up to the 2-day time frame. In this case, the 2-day isn't going to help us, because the 1-day is already a bit too messy. Going to the 12-hour helps us, but sometimes going to the 2-day is going to condense things and make things easier. So you do have that flexibility of switching to the 12-hour and going up to the 2-day if you have those time frames available to you. I place my support resistance areas on the daily, but sometimes I will switch just to kind of get a clearer idea of what price is doing. Anyway, I'm placing one here because it connects all these bounces here, which are slightly clearer on the 12-hour. If you go to the 12-hour, you can more clearly see these bounces here. I'm going to place one here to connect these bounces. But again, things are just very, very messy at the moment. I'm going to place one here to connect this bounce with these bounces. This is also support resistance. EURUSD is not really a pair I would want to trade right now. So that's some support resistance areas for EURUSD. It's very difficult to trade EURUSD right now. If you notice, with New Zealand USD, I told you guys New Zealand USD is in a range. It's essentially in a range between this resistance area here and this support area here. And when you get a range like this, it's pretty easy to take trades, because you're shorting from the top of the range, the resistance, and you're going long from the bottom of the range, the support. Now, EURUSD, it's a bit harder to see, but this is also in a range. Although it's kind of breaking out of it now, but it was in a range for quite some time. The range on EURUSD was a bit messier, but it was there. It was between this resistance and this support. Now, when I put these yellow lines, these yellow highlights, it kind of becomes a bit easier to see this range. You can see price bouncing between these areas here. It's a lot messier, but it is there. And if you go to the 12-hour, it's a bit clearer. If you probably go to the 8-hour, it becomes even more clearer. But it was very, very difficult to trade this range because of how messy and all over the place it was. But yeah, it was in a range. What's the time? We got about 20-ish minutes left. I want to jump into the Q&A, but I think we could do a few more pairs before we go to the Q&A. GBPJPY. Now, GBPJPY, what we're going to do is just follow the same process. Zoom out until we have about 3 to 4 months worth of data. I'm going to place the topmost. I'm going to place it here based on these recent bounces there. And place the bottommost. The bottommost is obviously going to go here at this extreme bounce here. And I'm going to place a second bottommost at the bodies like I've been doing with these examples. Now we're going to fill in the gap in between the bottommost and the topmost. Yeah. They don't connect extremely well, but they do connect. These here. Got to bounce. Oops, wrong tool on that second. All right. Bounce there. Bounce there. Also got a kind of minor bounce here. So There we go. We got some support there. And this one here. I remember a lot of these because I've been staring at these charts for a few weeks. So a lot of these are kind of just burned into my mind, these support resistance areas. This is one of the ones we have on GBPJPY, but you can see that it links up with these recent bounces there, and it's bouncing from it right now. So that's it, GBPJPY placed. How long did that take? That took, what, maybe under a minute, and I was talking you guys through it. You know, like I said, it is straightforward to place support resistance areas. Now, here's an example on New Zealand CAD where placing the bottommost one when you zoom out doesn't really make sense, and I'll show you why it doesn't make sense. Now, bottommost is down here. That's the bottommost extreme bounce. Why the hell is it doing that? Okay, that's better. And the topmost is, yeah, right about here. I'm gonna place it here with the most recent bounce. It would have originally been placed here, but it's been adjusted up to there. Now, I am following my step-by-step process, right? I'm placing the bottommost and I'm placing the topmost. I'm zooming out till we have about 3 or 4 months worth of data, placing the bottommost, placing the topmost. But in this case, the bottommost is so far away that we really don't even need to bother placing it. I mean, it's going to take quite some time for New Zealand CAD to drop all the way down to here. And by the time it drops all the way down to here, we can easily place that support area. That one's so far away that we don't really need to bother placing it. So what I'm going to do is for the bottommost, I'm just going to place it here because it makes more sense, because that's closer to where price is right now. And that's our kind of more immediate concern. Where price is right now is our more immediate concern. So there we go. Place support resistance areas on New Zealand CAD. We got the topmost, we got the bottommost, which has several bounces. As you can see, it has a bounce there, a bounce there, a bounce there. And I placed one in between here, which has bounces throughout there. And they all connect. Boom, done. We're done with New Zealand CAD. Pretty straightforward stuff, very simple. So guys, that's placing support resistance areas. It's a very simple process. I'm going to quickly do one on USDCAD, just give you guys an idea of how quick it actually is once you learn to do it, without actually talking you guys through it step by step. I'm just going to place them. And that's it. I place support resistance areas on USDCAD that quickly. That's how you place support resistance. There's no staring at your chart for 10 minutes trying to figure out where they all are. The thing with support resistance is the best support resistance areas are the ones that are easy to spot. Why is that? Why are the best support resistance areas the ones that are easy to spot? It's because that's the ones that everyone is looking at. When I say everyone, I don't mean retail traders like us, because retail traders are insignificant when it comes to market movement. The Forex market's way too big. The impact of retail traders is like 5% or less. So what I'm talking about is traders in banks and hedge funds. They're looking at the major support resistance areas, the big ones, the obvious ones. They're not looking at the little minor ones. And it stands to reason the most obvious support resistance areas are the ones that everyone is looking at. Whereas those little hidden ones that are very hard to spot are less likely going to be powerful because no one's looking at them. So no one's placing their trades based on those ones. So when you look at a chart, you want to place the ones that stand out at you. And the best way to do that is to do it fast. If you spend too much time staring at your chart and looking at it, then you'll start to see things that aren't really there. And you'll start to connect dots that are very, very obscure. But if you look at your chart and you place your support resistance areas quickly, you're placing them based on the ones that stand out the most. And those are the most powerful ones. So when I place support resistance areas in under 30 seconds on USD CAD, I'm placing it based on the most obvious ones that I see. And those are the ones that are going to be important. Those are the ones that are going to be useful to us in our trading. Those are the ones that are going to turn price around, because those are the ones that the banks and hedge funds are looking at and that they're using as part of their overall analysis. So that is support resistance, guys. It's very, very simple. It's really not that hard. It's just a game of connecting the dots. You connect the dots and you draw lines. Now, of course, just because you have support resistance areas on your chart doesn't automatically mean that you can enter amazing trades. There is more to trading than support resistance. Support resistance is just one piece of the overall puzzle, but it is a major piece and a piece that everyone should be using. So we have about 15 minutes left. We're going to do some Q&A. Please keep your questions on subject, guys. We are talking about support resistance. We're not talking about entering trades. I did a webinar on entering trades last month, or at the start of this month rather. And there's plenty of webinars and examples of how I enter trades. I share live trade videos. I do analysis every single week on YouTube. So there's plenty of info on entering trades. That's not what we're here to discuss. Today, we're specifically discussing support resistance. So let's keep these questions on subject and about support resistance. Starting with this one here, I'm going to try to answer every question, but sometimes I might miss some questions. Right. So first question, do you use institutional support resistance? There is no 100% way of knowing that these are institutional levels. What are institutional levels, for those of you who don't know? It's basically the support resistance areas, which I was just saying. The support resistance areas, banks, hedge funds, managed funds, the big boy traders, the whales, whatever you want to call them, the support resistance areas they're using. There's no 100% way of knowing what levels they're using without contacting every managed fund and hedge fund, asking for their support resistance areas, which they certainly will not give you, and then comparing them against yours. You can't do that. Not possible. But that's why I've just said, when I look at my chart, I place the most obvious ones, the ones that stand out, because it stands to reason that those are the ones that the banks and hedge funds are going to be using because they're the most obvious ones. So do I use institutional support resistance areas? I believe most of my support resistance areas are the same as what institutional traders would be using on their charts, but I have no 100% way of confirming that, and no one does. Giovanni, that's a good question. I'm going to come back to that question. It's a really good question, but it's a bit of a long answer to that one. So I'm going to come back to that one in a second. Do you use TradingView on US? That's, I guess, that's a kind of related question because it's using the same charts as me. I use the FXCM feed on TradingView. TradingView has multiple feeds. So when you put in a pair, for example, New Zealand USD, you'll have several options: FXCM, Oanda, Forex.com, ICE, or whatever this is. That's just futures. Don't worry about that one. I use the FXCM feed for all mine. It doesn't really matter. It's not because I trade through FXCM. It's not because I like FXCM or dislike FXCM. It's just, I just like to have the same price feed for all my pairs, so I use FXCM. I could just as easily use Oanda, but yeah, just FXCM one. That's the feed I use. I believe that's, well, I know that's New York close, but I don't know what institution they're getting their feed from, really. Is support resistance a zone or a level? Support resistance is always a zone. You can never have just a straight up level of support resistance. It's always a zone, and that's part of the reason why I like using shaded areas. It just reinforces in my mind that it is a zone, and when I look at it, I see it as a zone. Now, like I said, it doesn't matter how wide this is or how narrow it is. A lot of people just use solid lines, but it is always a zone. Support resistance is never going to be perfect. You're never going to have bounces that go exactly from your support resistance area every single time. It's always going to kind of bounce from here, and then the next time it's going to go a little bit lower, a little bit higher. It's just a general idea of where price is going to bounce. It's not a perfect level. It cannot be a perfect level. That's why you can't trade only with support resistance. There has to be more to it, but it is one of the things we use. Is TradingView free? That's not really related, but no, TradingView is not free. I'm going to go back to Giovanni's questions. Giovanni is a member, and I believe he asked this question in the forum, which is what he's referring to, and he wants everyone to hear the answer, which is a good point. Now, one thing with support resistance, which I actually have failed to mention, which I should have mentioned, is when a support area is broken, it's not removed from your chart, or when a resistance area is broken, it's not removed from your chart. It stays there. Now, here is a good example here on USDJPY. When a support resistance area is broken, it stays there. So here we have this area, which is currently support. Right now, this area is support because price is above it and price is bouncing from it like that. So it's a support area at the moment. But recently, this was a resistance area. If we go back to the 16th of January this year, this was acting as resistance. Price hit it and it bounced away from it. When price broke up through it, this area switched from resistance to support. Now, another example here on USDJPY is over here, this one here, the 111.85. If you go back to, this was 16th of October, 20th of October, 2018, price was bouncing from this as support. At some point, price broke through support. We didn't remove that area. That area just switched to resistance. That area now becomes resistance. And when price pushes up to that area after moving down, we think that it's likely that it's going to bounce. And in this case, it did. It bounced away from it there. So support just becomes resistance when it's broken. Now, why does this happen? What is actually happening at a support area? A support area is an area in which there are a ton of buy orders, right? So down here in the support area, there's a ton of buy orders. There's pending buy orders happening. And those pending buy orders are placed by banks, by hedge funds. When those pending buy orders are hit, when price pushes down to the support area and those pendings are hit, price starts to push up. Sometimes it'll dip back down, some more buy orders are hit, price will move lower, take out some more buy orders, take out some more stop losses too. A stop loss on a short trade is essentially a buy also. So it takes out some stop losses and it starts pushing up. Now this time when it dropped down to it, there was just so many sell orders that all the buy orders here, they couldn't turn price around.
We can't hear you. It's really
Apparently, guys, people can't hear me. I don't know. I didn't change anything. All right. I've just turned everything up. Hopefully that's better. Sorry about the audio issue, guys. Where was I? I don't know how far I got before the audio went down a little bit. Yeah. All right. I'm just going to keep going. So basically, there's a bunch of buy orders down here, a bunch of pending buy orders. But sometimes those buy orders there's not going to be enough of them. Sometimes the sellers are so strong that it just breaks through that area. Now, what you need to imagine with support resistance areas is that I'm just worried now with I don't know what you guys heard up to, but yeah, I don't know what to go back to. So I'll just stick with this buy order, sell order thing, and hopefully the audio wasn't too low and you guys can make out what I was saying. So yeah, when price breaks through, all those sell orders are taken out, and then all those buy orders are taken out when price breaks through. All the buy orders, all the stop losses are taken out, And now instead of buy orders, sell orders start being placed there. And that's why when price pushes back up to it, all those sell orders start getting triggered and price starts dipping down like it did here. Adriano, I've already said that I'm not covering in this webinar trade entries. I covered that in last month's webinar. It's all available for free on YouTube. Look back on my previous webinars. This webinar's topic is support resistance. I need to split my strategy up into specific topics because I can't cover my entire strategy in one webinar because it's just way too big and it would end up being a 5-6 hour webinar. So this webinar specifically on support resistance, and that's what we're here to discuss. If you want to talk about entries, or if you want to learn about entries, that webinar was on March 1st. Look back on my YouTube channel. And if you look in the webinars playlist on my YouTube channel, there are countless webinars where I discuss my entries and I discuss my strategy in depth over the course of, the 100 or so webinars I've done in the last 12 years. I'm trying to find questions now. I'm just looking back to see the questions. All right, I forgot that I don't have the questions on the screen. How do you feel about setting a chart to line chart for a bit to make chaotic charts? Basically what Ellie is asking here. It's something that some of my students do use. Let's use EURUSD as an example because EURUSD is one of the messier ones I've shown you guys today. So some of my students, what they'll do is switch from candles to line charts because line charts kind of clean up things and make it a bit easier to see where to place support resistance. And then you kind of connect the dots on your line chart instead of candles. You can do that if you want to. A lot of my students do this. It's easier for them. For me personally, I find this a little bit more difficult using line charts. I think it just comes down to experience. I've been using candle charts to place my support resistance areas for 17 years. So for me, candle charts is the way to do it. When I look at a line chart, I just feel like I don't get enough information to place my support resistance areas. But I've learned over my 12 years of teaching people how to trade is everyone works differently, right? Just because something works well for me with placing support resistance or with anything doesn't mean it's going to work perfectly for you guys. Some people are going to prefer candles like I do. Some people are going to prefer line charts. If you want to use line charts, feel free. It certainly does clean things up and it does make things kind of easier to see. I think it makes things a little bit too easy. I think you just don't get enough information, but that's me personally. If you want to use line charts, go for it. It's perfectly viable. I know a lot of traders using my strategy who use line charts to place support resistance and they are trading profitably. So I don't think there's anything wrong with it. Lewis Mora, can you show where it can be broken? I'm not sure what you mean where it can be broken. If you mean where support resistance areas can be broken, it's not. I mean, you see that just by me having placed them. There's a bunch of places where support resistance is broken. Here, there. Support resistance always breaks. Yeah, I mean, there's heaps of spots where it's broken. With SR, do you find stronger bounces from whole numbers on price? What you're referring to is psychological levels. Psychological levels of, I guess I could show you off the top of my head, USDCHF. USDCHF, there's two psychological levels here which come into play quite often. It's the big whole number, which is around about here, which you see I have an area slightly below it, but let's just, for the purposes of this example, move this area up to here. And this one here. On USDCHF, that's where the whole numbers kind of really become really obvious. Whole numbers, they do tend to act better as support resistance. So the reason for that is because these are psychological levels. Psychological levels, what they are essentially is levels at which traders place support and place stop losses and take profits and entry orders because they're whole numbers. The market is essentially driven by humans still. A lot of people say that the market is driven by AI, but it's not exactly true. The market is still driven by humans, and you see that it's driven by humans because price reacts to these whole levels a lot more than it does to random levels. So whole levels like 1.0110, or more accurately, just move it down a little bit, 1.0100. So that's like a whole number. And this is the big one, 1.00000. That's another whole number. These are what are known as psychological levels. Psychological levels are important. They work because traders tend to set their targets at these whole rounded numbers. So when you're in long on USDCHF, for example, from down here, where's your target going to be? Is it going to be at some random number like 99,432? Well, a lot of them are going to be, but a lot of them are also going to be at around about those whole numbers, which is 1.0000, or more accurately, they're going to be just below those whole numbers, which is why those whole numbers work as support resistance pretty well. That being said, I don't specifically look to place my support resistance areas at whole numbers because I think that's going to be a bit. It just throws you off a bit. Just place your support resistance areas where you see the bounces. Sometimes they're going to be just very close to those whole numbers, but not perfectly on them. How do you create the blue channels on your support resistance areas? I just use the parallel channel tool. If you look down, if you pop out this set of tools here, the parallel channel tool is down here. The first time you ever place it on your chart, it's going to look a little bit different. It won't look like my one. I think it looks more like this. Something like that. Then you just have to change the settings. Click middle to add a center line. Click background to give it a background. Change the colors to whatever you want. And then most important, click extend left, extend right. And then you get this kind of shaded area. I already answered that question. Psychological levels, emotional levels, they're the same thing. They're perfectly valid as support resistance, and you'll find a lot of my support resistance areas are at those whole numbers, those psychological levels. All right, guys, it looks like that's all the questions. I think I've answered most of them. I may have missed one or two here, but it's hard to get all of them because there's just so much text here. I'm going to wrap this webinar up. We're already 5 minutes over the hour. Normally I have a little bit longer. I scheduled 90 minutes or longer, but today I only have the hour. So that's a good question. I'll answer that real quickly. what I tend to do is I tend to place my support resistance areas on a larger time frame, and then I'll use them for all lower time frames. Now, there's no 100% exact rules on how to do this, but let's say we're trading 1 hour or below. What I would probably do would be place my support resistance areas on the 4 hour chart, and then trade it on the 1 hour. It's a good idea to kind of zoom out a little bit for your support resistance areas. The only real exception I have to this rule is when I'm trading the 5 minute chart. If I'm doing 5 minute chart scalping, what I'll do is I'll place my support resistance areas on that 5 minute chart, and I'll trade it on the 5 minute chart. But if I'm trading the hourly charts, I'll place them on the 4 hour, and then I'll use the 4 hour chart support resistance for 1 hour chart, 30 minute chart, 15 minute chart trading. How do I avoid having too many lines? I kind of already went over that. That's part of the process of placing them. You want to connect at least 2 dots for most of the lines in the center. The topmost, it's okay with 1 bounce, but the ones in the center, you want to connect at least 2 dots. And you just want to place them really fast and just get it done. You don't want to spend a lot of time staring at your chart trying to place support resistance areas. Like I did with USDCAD, which was the last pair I showed you guys. I just opened up the chart, I placed the obvious ones, and that was it. That's the support resistance areas placed. If I start staring at my chart and start throwing up lines all over the place, trying to get perfect ones in, I could say, oh, look, there's a bounce here and there's a bounce there, but these are all minor bounces. But when I start staring at my chart, I can start seeing bounces everywhere. But you see those bounces because you're staring at your chart too much, and those are really not that significant. So when you look at your chart, the easiest way to not place too many lines is to open up your chart, quickly place the obvious ones, and then you're done. That's it. Once you place the obvious ones, you stop placing support resistance areas. How do you plot them on MetaTrader? I don't really know. I don't use MetaTrader, but I imagine MetaTrader has a horizontal line tool. So just use horizontal lines. You probably can't get these shaded areas on MetaTrader, but they don't need to be shaded. That one was there before, but it got removed because price broke through it a bunch of times without reacting. So price broke through it there, price broke through it here, price broke through it again and again. And it became clear that this is no longer an area of support resistance, so it's being removed. If you really want to, you can leave it up there. But I tend to remove them once they've been broken through a bunch of times. Basically, when price starts reacting like that support resistance area doesn't exist, that's when I get rid of it. So there would have been one here, but price started just smashing through it as if it didn't exist a bunch of times. So that one's gone. All right, guys. I think that wraps it up. Like I said, I don't have that much time tonight. So I think most of the questions are answered. I'm going to wrap this one up. Thank you guys for attending. Hope you learned something useful with placing support resistance. To learn a little bit more about my strategy, just check out my YouTube channel. There's a bunch of videos on there where I discuss entries and all that kind of stuff. So yeah, thank you guys for attending, and I'll see you for next month's webinar. Next month's webinar, I believe, is going to be probably the 1st of April, or maybe... Sorry, the first. What am I talking about? Obviously not the 1st of April. I meant to say the 1st of May, or possibly Sunday the 28th of April, something like that. Between the 28th of April and the 1st of May. So I'll see you guys for next month's webinar, and I'll also see you guys for the weekly analysis on YouTube. So thank you, and I'll see you guys later.